Following video is from our Discord Q&A on the morning of August 10th. If you enjoy this video, make sure you click the link down below and join the Discord so that you can keep up with what's going on in the community. This Q&A was held by me and Joe. He's a hedge fund manager in the Discord. He's in there all the time. You're always able to ask him or me questions if you're one of the Discord subscribers. So if you enjoy it, make sure you check out that content or maybe even just read the website to figure out what we're all about. Hope you enjoy.
So, as I was saying, I basically have been managing money professionally for 9 years for advisors and clients in about 48 states currently. So, most of our strategies that I've run are longer, familiar with the options trading to some degree. I do some personal options. I also invest my personal money in a shorter time frame than I do for clients. I do a lot of technical analysis, technical charting, which is what I use to try and time the market, try and calm individual stock plays, which I saw you had a couple questions for. So I guess we can kind of just run down the list if you want to.
Yeah, let's do it.
Okay, so the first question, what's your strategy for taking profit? 20 to 25% seems far-fetched right now. And a lot of these questions are gonna, such as this one, are really going to depend on the time frame, on what you're looking at. And time framing is probably the most important part for when you're trying to set a profit, a stop loss, a target, etc. So if you're talking about options trading, obviously you can hit 20-25% in 5 minutes. That's not a big deal. If you're primarily trading stocks, this is why I would love to chat with you more individually, so you can explain to me how you're trading and what type of trades you're making, to really kind of help you out more with the question. If we talk about just buying something like the SPY, then that is probably far-fetched. I've got some interesting data that I'll post in our chat that explains kind of what I would expect for the rest of the year as well as the next year for the SPY. Now, for profit taking again, I really want to use, I don't know if I can share my screen or whatnot. If not, I can post everything in the chat later, but that's where I would use the technical analysis and an Elliott wave theory, primarily. Elliott wave theory is created by Mr. Elliott back in 1928. He was able to predict the top and the bottom of the Dow Jones over 3 different years through letters he sent off to President Truman within 2 cents, I believe, each time. And he's got a professional hit rate of 78%, which is better than any money manager I've ever heard of in the world. So a lot of that remains true today in terms of basic wave patterns. So it might show that you've got a 10% profit in there as a likely profit probability. It might say you've got a 40%, and that's kind of where I would take my profit set, is see the specific key levels. Let's say I was buying 100 shares of Shopify. I would probably sell 25% of them at the first key level, 50% of them with likely probability key level, and then the final key level if it gets there. And what you can also do with that is you can add a stop loss in if you get to, say, the middle tier of the 3 different levels, so that if it does reverse, you still catch out with a profit. But I'm not trading this market currently very much. I think it's going to be very choppy. I still think the lows might be in, but I think we'll probably go down and retest them before the election at some point. And it's just a very difficult environment right now. So unless you've got a high conviction on something, I've got a lot of cash sitting on the sidelines personally, as well as for a lot of clients right now. So try and go on to the next one here. Do you think momentum is over after a day or when? So that's another timing question. Momentum, if you look at any momentum indicators that you can find on Thinkorswim's platform or TradingView, it's all depending on the time frame. If you're looking at the 10-minute chart, momentum's going to move real fast. You're going to have it swing 4 or 5 times in a day. If you're looking at the weekly chart, it might take, you can have the momentum going the right way for a year. It's only over depending on what time frame you're looking at. And this is where it's like we set up a screen share and I can show you what I look at, especially on trailing 12-month squeeze chart. That is really how I determine when the stock or position is really rolling over or bottoming. And I can really show you that clearly if I can share my screen. But I can, again, set up a screen share with you or post some charts on that. Some stocks stock statistics worth mentioning. Another interesting and tricky question, I wish I could give you a just straightforward answer. It really depends on the stock that you're looking at.
Hey.
For instance, banks, you don't care about the price to earnings ratio. You care about price to book. Basically, how much are you paying for their underlying book of business. In addition, if you look at like the price to earnings ratio of a biotech stock, it's going to be something like 50, where if you look at a utility, it's going to be like 15 or 10. So what's better to look at is, if you have the data, is look at how whatever metrics you're looking at is at historically for the individual position, as well as compared to its closest peers. And again, I can kind of show you what I look at for that in a chart. But let's say I'm looking at, again, Wells Fargo, just to keep it simple. I want to look at the price to book on Wells Fargo compared to its 3 and 5 year mean and median, as well as I want to look at it compared to its peers. So I would say Bank of America would be a very good peer to look at. US Bank would be another one, because they're all in the same business area, where Goldman Sachs has more exposure to other areas of banking. And there is a good website that does give you good peer lists. I think it's Nasdaq.com, but I can figure that one out and send it to you as well. All right. So,
if you want to be able to share your screen, we can hop in the chat room below this one if you'd like. And then you'll be able to share your... You want to do that?
Yeah, let's do that.
Let's do that.
Over there.
Okay. All right, and here, this way you should be able to share your screen really easily.
Okay, perfect. So if I'm looking at, I'm going to move this over here so I can actually see it first. And for instance, you had a question here about CRISPR and when I would find a price to sell it at. So let me go back here. Again. So this is a trailing 12-month squeeze that I have created, and I can happily share with you if you think of them. I have one on TradingView, if you use TradingView. So basically, this is what you're talking about in terms of momentum. And so you had a question here about like CRISPR and like when would you sell it. So whenever you see these green dots here, that means that there's no squeeze firing. There's plenty of volume. It's relatively one directional. And then you get into these red dots. Okay, so it's still running. So you get into these red dot areas here, and that's where you're afraid to form the squeeze, and that's where you have really low volume, not a lot of direction. And momentum kind of stalls. And what you see is after these red dots turn green, that's when you get huge price explosion, where CRISPR goes from 147 to 220 bucks in a couple weeks, or vice versa. It goes from 140 bucks down to $42 real quick. So, Josh was talking, when I met with Josh last time, we were looking at the CRISPR as well, and we were looking at the squeeze here on the weekly form. And now, ideally, what you want to do is you want to be able to combine it with the daily. So I'm looking at the daily as well. We had it over the same time frame here. This is when Josh and I were talking, and I said, hey, it's probably going to blow up to about 85 bucks once it fires, because I think it was the first day. It was the day it fired here, the first day. And we had a big blow up. The other thing to really mention and take a look at here, if you're trying to trade this more time sensitive, is, let me zoom in here. Hey, can you guys see this okay?
Yeah, I can.
Okay. So when you see these blue lines start turning into the dark blue, that's a good sign that it's probably time to get out. And vice versa, when you see these red lines turn into yellow, that's when you're probably going to see a run up. And I like to look at the weekly and the daily. and you were trading in a shorter time frame, so we can go all the way down to the 5 minute, and I'll show you the same thing. So for instance, you had the squeeze buyer here, you had it blew up, so this would be a great signal here that you can buy it. And then as soon as you see this versus candlestick start to rotate round and then turn dark blue, you'd sell it here. So you'd sell it right there. And same thing down here. You see these reds go to yellow, reds go to yellow. But you're getting closer to the middle line, so it's probably going to go all the way up. You'd buy it down in here on this time during this candlestick here. You ride it all the way up until you see it turn, even without the squeeze. So your chart with the crisper here, I'll go down to the 5 minute. I believe that was a Monday, this one here.
Yeah.
Same thing is I would sell it once you see them start to turn blue, the dark blue. That'd be my signal that it's starting to roll over. See it happening here, you see it happening right here again. You had the big run up, and then they start to turn dark blue, and then dark blue runs down. Same thing here. Once they start to roll over is when I would sell to kind of take my profit. That makes sense.
Yeah, I've actually never used that as a short-term indicator, but it looks really, really accurate.
And as you know, nothing's 100% accurate, but
yeah.
You can get some fake outs like here where it turns dark blue and then it goes back. But you're going to get more of these during the off hours and on the shorter time frames.
Yeah.
Than you will other times. Okay, that was I got a message here. I got to figure out how to get to it.
Another data point, though. Oh, she's asking what this indicator is called and the lines on the graph.
Hey, Joshua, you kind of... Sorry, would you repeat that? You kind of cut out for me there.
Oh, you're good. She said, what is this indicator called, and can you explain the lines on the graph as well, please? The indicator he's talking about is called the TTM squeeze. That's what he's talking about when he's talking about the change in the colors and the lines.
Yeah, what, do you use any form of trading or like charting platform?
I believe she uses Thinkorswim. I think we've talked about that previously. We'll see if she's got a moment to type. Yeah. Her name is actually Katie. Before I've talked to Katie a lot. She's been in here for a very long time. Yeah, she said she uses. She says she's used TradingView or Thinkorswim and Thinkorswim.
Okay, I can share them with you. I'll just have to remember how to do it on Thinkorswim or TradingView, and then you can just save it. So this is just a trailing 12-month squeeze that somebody shared with me a long time ago. A guy who does a lot of day trading. And kind of an interesting thing, a little off topic here, but one thing you can do to find, I've got a scanner built in here as well. And then it'll show me these like AstraZeneca. And it'll automatically pull up which ones are in the daily, weekly, 2-hour squeeze. So I can find stocks that look like they're about to move really fast at any time. That's 4 hours, sorry. So we're kind of in these squeeze patterns. But yeah, I can happily share this with you. Studies, I think this might just be the normal trailing 12-month squeeze, but if not, I can share it with you. But basically, it's combining price, momentum with volume. That's really all it's doing. But it's helped me a lot. I'm being very accurate, especially when I'm buying. You can go down to the 1 minute if you want to, and really find when to buy in and sell out real quick. My data is delayed because I have my securities licenses, and so I'm on a 15-minute time delay. Otherwise, I have to pay a bunch of money to Fidelity or something.
Yeah,
so what I actually do is I use TradingView because I don't have any money there and they don't post questions. So I do a lot of this on TradingView and then trade on Thinkorswim or something else. So pretty simple stuff there. Next question here. When I day trade, what am I looking for? I don't do a ton of day trading, and when I do, I just stick with options with a lot of volume. Otherwise, I've found I really get crushed on the bid-ask spreads, where it just lowers your probability of winning. So I do primarily the SPY, the triple Qs, Apple, Amazon, Google, stuff like that. One thing I do look for is when you have massive one-day drawdowns like we had in Shopify. There we go. Yeah, this down day here. I think that was the day I was down like 20% or so.
Yeah, it was a crazy day.
I will look for these huge like sell-offs and then wait for it to fill part of the gap. That's an easy way, I think, to make pretty decent money. You just got to have a stop loss on it. And for a stop loss, I would look at the. Again, I would never. I don't even know if you can, Jack. You might know this. If you can have a stop loss hit after hours.
No.
I don't have it set that way. I can tell you that much.
No, not that I know of.
Okay.
Yeah, you might.
Yeah,
You might be able to if you have like a third party program that you, because I know you can link TradingView to your brokerage app and allow it to execute trades through there. So you might if you have that set up, but through Thinkorswim itself, I don't believe so. Maybe a different brokerage might have different features, but.
And this is like the other thing is like if you do a lot of technical analysis, you find patterns, like this is a really tradable pattern. You can pretty much draw a line right, I'm not good with, I do everything on TradingView. You can draw a line right here at the top, draw a line right here at the bottom, and literally just buy it every time you get to the bottom and sell it every time you get to the top, or get close to the top. I mean, it's a really easy trading pattern to make, you know, but bouncing between $30 and $40, so 25%, you know, every week or two. These are easy patterns to trade. So I would set an alert, like let's say Shopify, for instance, goes back down here to like 31.50, buy some at 31.50, and then ride it back up to $40 and trade it. I made about 600% on Fisker over about 8 months, just trading Fisker between $10 and $14. It just kept bouncing up and down that range. That's the kind of like day trading stuff I look for. I don't really try and make a trade every day. If I see some really easily repeatable pattern or something that's really obvious, such as, you know, you can look at the RSIs here, you see that every time it blows, Shopify here blows above, you pretty much peaked, and you're going to have a downside every time it drops down here in the blue. I would wait till it's crested out of the blue, because every time it crests out of the blue, you're pretty much buying at the bottom, and then ride it back up. And technical trading, a lot of people try and make it too difficult from my experience. Find something that works for you and works well for you and just stick with it. You don't have to have 8 different indicators, you know, using hammer curls and all that other, hammer candles, sorry, and all that other stuff. It's just whatever you find that works. Do I have stop loss for every stock? If so, what percentage is it? No, my stock portfolios for my clients range between like 35 and 50 securities, so that would just be too much to be constantly monitoring, and that's again longer term. For my personal stuff, I would say maybe half, and it really depends on the type of trade that I'm doing. If it's a company like Shopify that I know the business model back to move forward and I know that they're going to do well, I'm not worried about if they go lower, because I know 2 or 3 years from now, I probably shouldn't say no, I have a very high conviction rate that this thing will probably double at least in the next 3 years, even if it drops by another 30%. But if I'm trading something that's a little shorter term, then yes, I will definitely put a stop loss on it. And what I'll do is I will look at something, let me switch this view here over to TradingView. I'm about to load it up. Yeah. Got so many dang alerts. Oh wow, big day on the market. I didn't even look at it.
Yeah, that CPI data came in just like slightly below estimates, and it really blew up market.
So I like here's like arc, and then I just drew the line here because it's a perfectly bouncing up off here. Let's say we wanted to trade CRISPR. And we've got a lot of support here, which is why I should have bought. I had an alert go off like $45 to buy it here. I didn't stick into it. Let's say you want to trade CRISPR here. I would look at what the pattern is, what the Elliott wave is going. So if I want to just do like kind of like a quick wave count here, I would call this 1 and 2. And then I would do an extension here. Most common number is going to be this 1618. So let's say, and the volume lines up with it pretty well. You got a lot of green volume popping up here in the shorter term. So now this is not something I would do because I've already missed this, but I know it would invalidate my wave count if it dropped below here. So I would set a stop loss here at $52. Realistically, I would have, if I wanted to do this, I would have bought in here and still set it at $52 with a price target of 104. And when I trade like this, I'm not gonna. I always look for at least a 3-to-1 risk to return. So if I'm setting my stop loss down 10%, I expect to make 30% on the trade, on the upside at least. So I would look for key levels of technical support here. Anytime I'm setting a stop loss, so you don't get stopped out and then have it run. As well as you need to kind of see the intraday movement in the position. So if you're looking at, and I don't know a good way to find this, I just kind of eyeball it, but you know, if you're looking at CRISPR here, I mean, this thing swings from $83 to $74 real fast. The volatility is so high on it. When you're doing trading something like this, you're going to have to set that stop loss a little higher and lower, a little wider, otherwise you're going to get roasted. You get something like Intel here, which is just getting killed. You know, if you wanted to buy Intel here today, and the reason I would look at it potentially is from a 5-year logarithmic perspective. You're right here at the most common retracement off the lows of 2008, right here at the 618. So let's say I wanted to buy it here today. I would set my stop loss down here below the key technical level, because if it breaks here, it's going lower. And then I would expect it to rebound, retrace at least back up here at $40. You know, the key to stop loss for me is I expect to make at least 3 times for what I'm risking on that stop loss. If you don't have that conviction, I personally wouldn't play it. But I would look at key technical levels, and the simplest one to do is just do the Fibonacci retracement stuff. So if you find a better stuff. Let's say we've had this huge drawdown in Apple. You think the bottom's in. You want to buy it here after this pullback. I would just use what's just a simple Fibonacci retracement. Draw from the top to the bottom. Got 1 here to find your possible peak. And if you do a Fibonacci retracement from this move, because you had that recent dip, you think the bottom's still in, I would set it here. Delete keyboard or something, or keyboard, yeah. I would set your stop loss as the next key level of support. So if you bought it, in, say in here, you thought the bottom was in for the short-term pullback and bounce, I would just use a simple fib number and set it to the major one below. So I would either set it below 130, and I don't set it right on, I set it below, because sometimes you would cross just a little bit. So I would set, let's say we're buying in at 138, I would set the stop loss here probably around 131, just to be safe. Right in here. So if it triggers, I'm risking my $7, but based on an extension here, I'd expect this to go up to 158. So I'm risking the $7 to make 21. So that would be a 3-to-1 risk reward. It blew through that, so it's probably going to 170 something. Which I wouldn't sell it here necessarily, but I would keep an eye on here. And if if you get up to say whatever your target price is, just raise the stop loss. Keep it to $7 lower or whatever you want to do. The key to stop losses is just so if you're not paying attention to it, you don't just get wrecked by missing a couple days and having a DocuSign hit you for 45% or whatever.
That was a rough one.
So we've covered the when you know how a stock hits peak and begins collapsing. Again, it's all based on your time frame. So if just back to the trading view that we were looking at, how the thinker swim. If once it starts turning on the shorter time frame, it's going to pull back in the short term. On the longer the time frame, the bigger the pullback's going to be. Once those bars change. So if you're looking at a daily or a weekly, especially on a weekly, that thing starts to turn over. You're going to have some real movement in that thing over the next couple weeks. Voltage indicators loss of momentum. Again, I use the squeeze metric primarily to keep it simple. The big thing is just volume, which the squeeze is kind of simplifies it all. You don't have to hand calculate all the volume and the momentum going together. It's just in one easy C chart. So I wouldn't waste the time looking at anything besides that personally. Do you take profit in a green rally before earnings? Lock in 10% profit or hold? That is an excellent question. I try not to trade too much on earnings. However, if you are trading on earnings or if you own a position going into earnings and you do see a huge run up, again, I have price targets on every single one of my positions and where I need to watch it. So if I'm not near it, I won't worry about it too much. If I am, what I would look at specifically is what the hit ratio is. There are sites out there that will tell you what the percentage it goes up after earnings as well as how sensitive it is, up or down. So if a stock goes up 76% of the time per se after earnings, swing 10% sensitivity, then you might as well. That's a math. For me, I play the statistics, right? At 70% chance it's going up. I like it. I don't want to sit there and take money and lose it. That's really a tough question. If I'm at my price target and basically it says that it's probably going to switch around here, rotate over here, that's probably a sign that something's going to happen at earnings, and I would sell it. So if those candlesticks look like they're returning, about to turn colors, or if I had my Fibonacci extension hit right at that number, pretty much, I would sell it. But if it's in the middle of it, I would probably just let it ride. That's really to each their own type of question there. So I'm going to the next one here. If there's a market green rally and stock is in a downtrend like ExxonMobil, what can be determined? That realistically nothing. What you need to do research and see why ExxonMobil's going down. For ExxonMobil's case, I'm assuming you're referencing a couple weeks ago when oil came back from $125 a barrel down to 95. That is why ExxonMobil came back. Energy had run too far, too fast. It was over. It just needed to come back. That whole energy trend. So I would start by looking at, ExxonMobil, obviously in the energy sector. Is the whole energy sector itself coming back? Most often, that will be the case. For instance, you have plenty of days where you have either the 11 sectors up, you have 3 of them red, and that's just gonna take some trouble and take some time. And then, so yeah, I personally would look at it as a sector, and if the sector's green and ExxonMobil's red, then you need to dive in and see what the news was, because then there's probably something wrong with the company, or some news came out. And then that's when you really want to be careful, because if everything's going green, energy's up 3%, ExxonMobil's down 3%, there's something wrong. So that's something that you definitely then would want to dive in and dig into the company and say, okay, what in the world is happening? Do I need to get involved? Or or reallocate funds, or is it just a flip? Again, if the whole energy sector is green, the market's green, ExxonMobil's big on the red, probably a good sign that there's something fundamentally wrong and need to address. So why is 2 p.m. considered power hour / sour hour? Excellent question. I have no clue. Last hour of the trading day. I know on Fridays you get a lot of guys who are trying to close positions at the end of the day, which is why you see oftentimes on Fridays the market kind of sell off at the end of the day, especially for long weekends. I think it's just good question. I couldn't really tell you. Do you think the market makes the most movement at the beginning of the day? If not, then when? Or do you think it matters? This is where limit orders are really helpful, because a lot of individual positions, especially, seem to pop or drive at the beginning of the day and then retrace back towards the middle. Meaning simply like if you're down 5% in the opening of the day, the position often will end up down about 2 or vice versa. I do think that you see the most movement in the first 30 minutes simply because of all the after hours trading that automatically like hits at the start of the market, and then it kind of rationalizes itself out. I, for one, don't purchase much at the start of the day that's up, because usually it seems to come back at some point. By the same thing, I don't usually sell at the beginning of the day if it's way down. However, you could flip that. Oftentimes, if I see a position open up huge that I want to get it, then I know I want to get it, sell it there and be done with it. It seems to me that the middle of the day is usually the calmest unless someone like Powell is out there saying something. You know, you've got some big market mover. I think that the most movement probably does happen at the start of the day and then at the very end of the day. And that's just people positioning for the after hours trading for the most part. I would say I do most of my trading in the middle of the day, just because of the lower volatility. So what's the minimum volume needed for momentum stocks? Or can the number of volume not matter when the trading trends? So there's no necessary minimum volume. And Josh, do I have trading view up on there still, or which one is it?
Do you have trading view up?
You just need to look at the volume comparative to the other days. So it doesn't matter like how much actual volume is there. If there's 10 shares or 10,000 shares or 10 million shares, it just depends on how it is relative. So if let's say the average volume on here is 50 shares a day, these big ones are 100 shares a day. It doesn't matter. I'm just looking at where the volume spikes compared to the rest of the volume bars here. And volume is also trickier to look at on really small time frames. I pretty much only use volume on the daily and the weekly, primarily the weekly. Because you guys kind of look at the timely daily volumes here, and they all kind of spike the same. They'll spike here at the intraday, because I think that all just does it. But there we go. I'll just zoom in. That makes it easier. This doesn't really tell me much. Besides, okay, you had to sell at the end of the day here. You had to sell times this. Yeah, at the end of the trading day here. That doesn't really tell me much. I think for volume, I have to look at the weekly and the daily chart to find the volume spikes. So, you see a huge weekly volume spike here, it's a pretty good sign. When you see this really thin volume, it's kind of just chugging along with momentum. But again, I think the squeeze, this is the other squeeze here, anytime the dots are dark, it's harder to see on the screen, but is the easier way to look at it than anything else. I'm a big fan of it. I've never been great with looking at volume. Volume for me is more of a validator for the reason. So, I know it's in a wave 3 of Elliott if we have a ton of volume. That just validates that I would correct my wave count. Not as much as the volume is going to make the wave 3. All right, what indicators let you know stocks overvalue, like ExxonMobil and CRISPR? This is a question that I would like to just ask you. Are you referencing this as order values for specific short time frame or as a whole? Because again, I would look at something like, I'm going to switch the screen up. No, I could probably just do this. Is this on white charts now, Josh?
Yes, it is.
Or did that? Okay. So just to keep it easy, like the PD ratio here on ExxonMobil, so I'm looking at the last 10 years. The minimum PD ratio here is 9. The average is 19. The median is 7. Currently, we're trading at just under 10. Just from that, I would tell you, well, this is probably pretty cheap historically. So I'm just looking at comparatively to how it's been trading. And these oil companies are a little harder to look at right now just because you have the weird oil crashing to $0 stuff in there. But you can look at all kinds of different stuff.
Is this a service you're paying for?
Yeah, this is a service I pay for. But I mean, you just look at as many metrics as you can, specifically price to earnings, price to sales, peer to bank, price to book, and just notice how it is specifically in like the last 3, 5, and 10 year periods compared to the mean or average. If it's, and I think you can pull this stuff up on that type of stuff up, but just about anywhere. But that's how I would look at something like fundamentally over or undervalued. You also want to pay attention to like, okay, is there a reason why the price to earnings ratio is so much worse? And for instance, is there something fundamentally wrong with the company? Like, Intel, are their revenues going down year over year? If they are, obviously it shouldn't be worth as much. But if the company's revenues and earnings are staying relatively similar over an extended period, and the rest of the metrics look like they're cheap historically, that's how I would look at it. Now, from a technical standpoint, again, I would look at, I hate to keep going back to it, but I would look at the RSI, and I would look at the squeeze. So if you see the RSI is really high, I never buy anything when the RSI is over 70. It's going to come back at some point. If you take any chart and just look at every time it's above 70, you're going to future. And what I would do is just here and here, you're going to get a pullback of some sort. It might not be huge, but never buy it if the RSI is really high. So like right now, Apple's RSI is high. I wouldn't buy it. You're going to get a pullback here pretty soon. Simple stuff like that. In terms of long-term valuation, the other thing you want to look at is like compared to its peers. I'm just going to pull up Zacks here because it's easy. So we're looking at ExxonMobil. And you can find this elsewhere. I can figure out where that free one is. But I just know this is an easy way to do it. So it's going to compare it to BP, Shell, and PetroChina. So you can just take a look at their metrics compared to everything else. So for instance, the PE forward here, Exxon is 7. Oh, it's more expensive than all these guys are. Price to sales wise, more expensive again. So this would tell me that these are probably cheaper plays. It can also, more importantly though, comparing it to the industry here, so like the price to earnings up, it's more expensive than the industry. Higher price to sales. Yeah, Exxon's probably a little expensive right now. Compare it again to everything else. But then when you compare it to historical metrics, it's really not.
What would matter more to you?
So right now, I think Shell would probably be a better purchase because I'm sure they're trading historically cheap as well, just from a pure valuation standpoint. What was your question, Jack?
What would matter more to you when you're? So you already kind of answered it because you said Shell would be more important, but I said that if you thought something was cheap historically, and then you saw that its peers were better, would that automatically send you over the peers? With an oil company, it might be not matter much because you're just looking to make an energy position. But let's say you're evaluating Intel versus AMD. You notice that Intel is historically cheap, but it's not as cheap as AMD. That's not the case right now. But if it were, would that cause you to go for a different company, or the fundamental analysis of each company outweigh that? Is that clear?
Yeah, that's where you'd have to go into the fundamental analysis of each company. For instance, ExxonMobil has it's about $11 cheaper per barrel for cost to cover all expenses as well as their dividends. So to cover all of ExxonMobil's expenses and pay the dividend, it's about $35 per barrel is what the price of oil needs to trade at to be profitable. And obviously that's going to be fine for a while. Shell's is like 48, I believe. So that's an internal factor of why Shell is trading cheaper than ExxonMobil is. It's going to, it's a little bit riskier of a position. So yeah, that's where you got to dive into the actual company to find out is there a reason for it. And as you said, like Intel lost the chip war, and they're totally revolutionizing the business, which is why Intel has done terrible over the last decade. AMD has done fantastic. So you definitely have to dive into the actual, like AMD here went from $2 to 160, where Intel in the same time frame has gone from 2013 like that, $20 to 63, and they're back down to 35. There's a reason for that, and that's the fundamental business model that's going on. Intel chips basically aren't being used in anything right now. The ones that aren't very good. So, but just that's just another thing to look at, right? It's just valuation, just another piece of the puzzle, and there's a whole lot more to it, obviously. But from a pure valuation standpoint, just go back to the question. I mean, that's what I look for. I want to look at how is it compared to the industry, how is it compared to its peers, and how is it compared to itself historically. That'll give you a good idea of how its actual realistic valuation is. And then I would want to look at price to sales, price to earnings. I would want to look at their revenue to make sure that there's no change in revenue. You generally obviously want to see bigger revenue every year, right? And if there is growing revenue, and the margins aren't getting crushed for some reason, then and the metrics look cheap, then it's probably pretty safe to say it's very cheap for the time being. And I'm sure there are free websites that kind of put that stuff all together for you. And again, I can find, I've got so many of them saved, I can just scroll through them when I get some time today or tomorrow and just post them in the chat.
I know FinViz provides a lot of the information for free, although sometimes it's delayed if you want more short-term stuff.
And then, for companies like CRISPR, CRISPR, good luck figuring out that valuation. It's a pipe dream, right?
Yeah.
So,
yeah, I'm looking for, actually, CRISPR in particular, I have 68 I'd like to get back in because I sold at 85. I'm looking for a pullback.
Yeah, I don't know if you'll get there. It seems to be going to change this channel up here. Now that we've got a little bit more defined. Yeah, I don't know if we get back down to 68.
What we got?
Not saying he couldn't, but
yeah.
Especially with the support levels here in the past, and you got support for me right here. Yeah, I don't think you're getting back 68.
Oh.
Let me know, I'll buy some with you.
What? If we do, you buy some with me?
Exactly.
Yeah. That's what I had previously, Matt. From the channels you got, looks like, I don't know, come back to 75 maybe, but the risk reward here for the 104 still seems pretty good.
It does, yeah. I would just watch it if it breaks that trend channel. If it breaks through this trend channel hard, then you got to pay attention.
Yeah.
stuff. That's, I mean, yeah, you could buy it today and then just sell it when it gets up to the top of the trend channel and bounce it back and forth, realistically.
Yeah. It's been a great mover, though. I was fine because I got, 45 from I was at 50 average to 85. I was feeling really great, so I went ahead and pulled out.
Yeah, so I guess the next question here was understanding how long an uptrend or downtrend lasts. What's your advice? Can last as long as forever, realistically. I mean, again, it's looking at your time frame and the type of charting that you're using. So if you're looking at like Shopify's weekly uptrend here, that uptrend lasted from $28. So that's what year is this here? From 2019 all the way to 2015. And what I would look for, but again, if you're looking at shorter time frames, you're just looking at daily charts here. And one thing, you've got the uptrend that lasted for 4 months and then came back down in March of 2020. March of 2020. So it really just depends on the time frame you're looking at. If you're using the weekly chart, the daily chart, you can kind of figure out what the trend is. Realistically, the trend switches when you see that big old squeeze form again, and then it released the other way. Every one of these is released up after the squeeze here, and then all of a sudden, boom, releases down. So I would focus again on the squeezes as well. That's kind of really what I look for. Also, I do use moving averages quite a bit. I think this is the 200-day moving average, or 50-day. Anytime it breaks, really crushes the 50-day, it's kind of when I'm like, all right, this is probably reversing. It's time to really get out or certainly address it, take a look at it. I don't use the SMA or the simple moving averages quite as much as I used to. I used to do a lot of crossing between the 13, the 30, and the 50. But now that I've been using the squeezes, I've had more success for the most part working with those. But I'd be happy to do a whole demo on what I used to look for.
I'm in the middle of that transition. I'm in the middle of that transition right now, trying to use the squeezes more and get away from those exact same SMAs. That's funny.
But you look at these here. I mean, they're all crossing right here at the same time the squeeze is firing, and they both worked.
Yeah.
So you get those working together. You're like, yeah, this is probably a really good time to get out. Even if you took that hit here, it's just a lot more pain to go. I'd rather sell a Shopify here, even at the end the bottom of the week at 113, than right all the way down to 30.
Oh, for sure.
So to kind of answer your question, it's how long does an uptrend last? It just depends on the time frame, what you're looking at. I would focus primarily on the weekly and the daily, especially in terms of longer term trending. I don't really dive into like the 2 hour too much, because you can have these quick little uptrends that last and then roll. And again, if you're worried about it, just watch for when the bars change different colors, because you get a pullback every single time when the bars change. It's like clockwork. You're not going to hit the perfect high, but you're definitely going to get out long before the bottom if you're paying attention to them. Combine that, with any time the RSI is real high, whatever time frame you're looking at, and you're probably about the top. You might not hit it perfect, but you're going to be pretty accurate with them. Seems like 3 strikes up results in a downtrend sell-off. Any statistics for this? What helps you determine the stock's movement 3 months out? For strikes up, are you referencing just the daily bars? Are you just referencing like 3 green days in a row? 1, 2, 3? Not quite sure exactly what you're referencing there. As far as I know, there's no statistics on anything like that. How will I determine a stock's movement 3 months out? I would look again at, let's switch the stream again. I would look at Using again an Elliott wave count, and we're predicting here, so we can just stick with CRISPR since we're already on this one. I'm looking at 3 months. I'm going to use the daily chart. I'm going to use an Elliott wave extension here. Wave extension, I'm expecting to go to 120 bucks. And we've got a good trend channel going here. For instance, CRISPR 3 months out, so that's the July. So we're here. September, October, November. I predicted to be somewhere in here between 115 bucks, or well, probably tops here again. So actually, this will probably top out. Do something like this, and then have a big corrective phase down here. And rip up again. So some people use these Fibonacci resistance fans and extension fans. I'm not a huge fan of them. I've never honestly been very good at predicting the exact time frame unless the wave count is there. Again, just a simple trend channel with where I expect it to go here at 110 is going to tell me that 3 months out, it's probably going to peak sometime here, early end of October, right before the election. Then maybe get a quick pullback and then rip back up. If you're looking at something a little simpler than something like CRISPR, which moves like crazy, like the SPX, you can do a similar type thing. But for me, it's all about finding my Elliott count and where it's going. Again, then you can look at the squeeze. So this is probably, we're about to roll over. Again, it's flattening up here. Look at what it did back here. Flattened, and then you had a pullback. This one rotated real fast and pulled down. This is more of a gradual, so it's probably going to rotate down. Meaning this is probably going to go down here. And then again, you can kind of figure out the time frame based on this here as well. Just using similar amounts of time. So for instance, this was April to May, about a month there. This one, not quite a month. So you can kind of figure out relatively in a month where you'd expect to be. If, yeah, that's tough. I've never been great at doing that. Trying to figure out where something's at 3 months from now. I just prefer to focus on just the longer overall trend line and just wait for when it pops and changes. Historically, interestingly enough, in an election, I could pull that. This is happening at each line. Find this real quick, hold on. Fortunately, in my industry, I've got a lot of people who send me, do a lot of the work for me on stuff.
It's a beautiful thing.
Okay, this is really interesting here. So this is information from Federated Kaufman, Federated Hermes. They've, I think they're about a $100 billion firm. Just about what's going on here in the midterm and the presidential cycles. Just looking at the worst 2 historical quarters in any presidential cycle here is the second quarter, third quarter of the term. Those are the only 2 ones that are historically down on average, which is, where we've been and what's been going on. Next chart here, the average drawdown during a midterm election year is 19%, which is pretty huge, right? This is the S&P 500. We hit like 23% at the bottom, so it's pretty average, pretty normal what we're going on historically. If you look here, it's every single year since 1962, every single midterm, there's been a drawdown. And every single following, there's been a massive run-up. The average rally following it is 31%. So that's pretty pretty striking statistic, especially when you consider how you've not missed once in any midterm over the entire span since 1962. Now, looking at the timing question here, these are the average performance since 1994, and where the market kind of bottoms. Bottoms right in February, which is about when we did the first time, and then it bottoms again, pretty much double bottoms here just before the election in October. And then after that, it just rips right afterwards. So this is like 1982 and versus 2002. I'm sure he's got an updated one of these slides here, but now we'd probably be about right here, right here. So we'll probably get another sell-off here and then have a really good rally at the end of the year. So what this data is all telling me is I've got 27 and 20% cash in all my portfolios for my clients. I'm going to get all that cash to work before the election, probably early October. Get one more nice real big pullback here and get that cash to work, ride it up. And then I want to look at it from another perspective though. Okay, has anything changed? Not really. Inflation stinks. We are in a recession no matter what the government wants to say. There's not much good on the horizon. Again, we just spent another $1 trillion, even after the fact that spending is what got us in the mess in the first place, which is going to hit us in about 6 months usually. So I don't think long term there's anything really positive. So what I'm probably going to do is ride that post-election bump up into early middle of next year, say February, March, sell it, put it back to cash. But these are certain things that you can look at to help reinforce your ideas on what's going on and why the market should go where it's going to go. I'm happy to post stuff like this in the chat. So, yeah, if anybody has any questions or whatnot, I'm happy to always here to help. Anything you need, let me know. If there's anything else, you can always post it in my chat, or you can message me directly. I've got more data than I know what to do with it. So, if you got any questions or anything, I can probably send something your way that'll help. I'll put this whole slide deck in there too. Pretty interesting stuff. We've also got an interesting one from JP Morgan that predicted all the technical analysis. That was pretty cool. It came out about a week ago, kind of explaining the tops and bottoms on everything out there. And where the realistic possibilities of the market can go over the next couple months.
Is that the one that was talking about all the chop that we're in right now? Is that the one you sent me? Actually, I think.
Yeah.
Yeah. Okay.
Yeah, this one here.
Yeah.
Yeah, just explaining kind of the levels that we're at, where everything's surrounding, where the realistic ways that this can go to, where the big resistance levels are. So it's not all me just pulling this out of my rear. It's I get a lot of help and a lot of data and research from the biggest, best guys in the world. So it's nice when somebody else kind of validates what you're already thinking, especially when you get a lot of validation.
Yeah, more opinions, better.
But I appreciate everybody that give me the time, and if you got any questions, just let me know. If you want to talk one-on-one individually about something more specific, we can do that. I'm happy to help, happy to share. I learn a lot from everybody else, so least I can do is get back.